Hi, I'm Stephen Leeb coming to you today with a market update from Leeb, Leeb.com. Before I start, I want to remind everybody to please sign up for our absolutely free market letter. It's on the site, and again, it's for free, and it goes into much more detail. Today we saw basically a kind of up market, but it was a day of very high volume because of so-called quadruple witching, and it's hard to read that much into action today. Yet, if we step back and look at action this week, we have to say the market is definitely slowing down. Economic news has become decidedly more mixed. For instance, this week we saw mortgage applications fall, but we also saw employment insurance claims. The number of insured unemployed, I'll get it right, fall fairly significantly. The latter figure is somewhat suspect, but what is becoming less suspect is the fact that these so-called green shoots are not really that tall at all. Probably most significant in today's action was a decline in some commodity prices. In particular, oil fell, gold was flat, but if commodity prices are losing their luster here, it again is another piece of evidence that the green shoots are becoming ever less green. And if that's the case, the market really could have problems in the months ahead. It would suggest that the Fed's going to have to loosen even more, that is, buy even more bonds to keep the economy going. And that's one of the reasons, or basically part of the reason, that we continue to believe that the upside in this market is limited, whereas the downside could be as low or even a touch lower than the March lows. There will be a great time to buy stocks and to buy with abandon, but we're really not there yet. And until we get there, we continue to urge that you have a fair chunk of your assets in real defensive plays, of which precious metals remain among our favorites. Thank you. Have a wonderful weekend. We'll be back with more updates next week.